Welcome to Real Money Talks, how to make money, manage money, and invest money. Your Real Money Talks host, Laurel Langmeyer, gets straight to the point about what it actually takes to make money and build lasting wealth in today's changing economic climate. If you're ready to get the financial results you've always dreamed of, keep listening. Real Money Talks is the right place for you. And now here's your host, Laurel Langmeyer.
Hi, this is Laurel, and welcome back to Laurel's Real Money Talks, where we talk about how to make money, keep money, and invest money, and how to do it with the team. It's really the Millionaire Matrix system. Anyone becomes a millionaire when you follow a system. It's not pixie dust. It's not a hope. It's not a prayer. You can all do it. You need to make money. As you make money, you make it inside companies because companies make money. Individuals get taxed. And you start putting money into what I call a wealth account, which is an investment account, money put away for investing, which is the pay yourself first model. That's simultaneous. I think that's where a lot of folks, because I'm working with people very, very intimately, helping them become millionaires, and they're falling down on making it a sequence, not simultaneous action. So as you make it, you put your money into your main operating account. That's a corporate structure. Then you put some money away into another corporate bank account to put money away to invest. So I'm going to keep reminding you there is a system, and it is not difficult. It just takes absolute persistence and discipline. So today we're going to talk about a very cool make and invest with a team. Like, it's just all of it. It's just so cool. It's crowdfunding. So I'm going to be bringing some of the world-leading crowdfunders to our conversation as we move ahead, because I'm looking at equity crowdfunding my company, and I'm excited about it. It's just a different way to play. So Indiegogo and Kickstarter, I mean, it's billions of dollars have been in donor platforms. So donor platforms is when, I mean, those are the two big, kings of the kingdom, again, Indiegogo and Kickstarter, but you're donating things. And then what I don't like about it, I always say, those are interesting. And it's amazing how many people donate just on odd causes and on odd ideas and different things, but there's no accountability. Like, I could name, and I won't here on the podcast, but I could name a lot of businesses that have been donor crowdfunded through those sites and still don't have a product. I mean, there's one that I know is upward of $20 million of donations and still has not produced the product because they don't know what they're doing. So I have a huge issue with the donor side because it feels charitable. And a lot of that just, it comes from a plea and oh, please help me, versus teaching people to be smart. So I'm not a huge fan of that. If you want to do donations, then do them, but do them smartly, not expecting that you're going to get some, interesting item back for doing it. So that's donor crowdfunding, not really the topic of today. The topic today is equity crowdfunding. Equity crowdfunding is on the run, and I'm predicting in the next 5 to 10 years, it will be the way that investors invest. We're going to invest through portals, through to broker-dealers. Because of the Jobs Act now, which is kind of fun because we are now about a year. It's like our month anniversary here in May 2016, equity crowdfunding because of the Jobs Act is totally a different game. And there's completely different crowdfunding platforms that allow you equity. So like we equity crowdfund our gas and oil. We're about to put a real estate project on it. Realty Mogul has done an extraordinary job of equity crowdfunding real estate where you can buy smaller lots like 5,000, 10,000 toward a larger commercial project that in the past you were never able to do. They have all these exemptions now to the Reg D filings. So if you're an A plus, you actually can be non-accredited and do $5,000, $10,000. See, the big debate amongst the investor community is, to do a lot of, the kind of investing that I talk a lot about off Wall Street, gas and oil and franchises. It's a private placement memorandum, right? And there's very strict rules around it, very critical that you follow them. And because of the Jobs Act, now they've allowed non-accredited. And, here's some parts of the debate and just interesting inquiry for all of you to think about. Is just because you're accredited, which means you make over $250,000 or you're worth $1 million, does it really mean that you're smarter? I mean, you could be a high income earner and work as an engineer in the tech firm and actually not know a lot about investing. So just because you make the money doesn't make you qualified, although the law says that used to say that you had to be accredited to do it. Or are those people just as similar as those who make $50,000 to $60,000 a year who might have the time to study investments? Or, I say watch Shark Tank. I mean, not that Shark Tank's an educational show, it's an entertainment show, but it does allow you some insight to how, introductory entertainment, I'd call it, is what the Shark Tank is, to how deals can at least get started and get pitched. So equity crowdfunding is on the rise. It's a portal where people go through, they get educated, they learn about investment, they actually invest according to very specific criteria, and they're buying equity inside the companies. So there's a lot of these coming up. Thousands and thousands and thousands of projects are being handled this way. So it's a peer-to-peer, game. In the real estate world, it provides a very, irreversible trend that is really going to rock the traditional banking and the investment players, because it's a way that the consumer gets to get to another consumer and not go through the financial institutes. So it's really going to rock everything that I'm talking about, which is this financial structure that was set up in 1933, the banks, the mortgages, how they're set, the rules and the restrictions that banks and the investment houses, must adhere to. They're going to encounter all sorts of difficulty matching the flexibility of crowdfunding in terms of the amount of placement, the choice, the timelines, the returns, the speed of the transactions are just extraordinary. The success just specifically in the real estate crowdfunding is going to escalate as it is right now. We're seeing it in many, many, many other industries. Like we said, we're doing probably 3 to 5 million a month in gas and oil projects, all for accredited investors. We're not offering to non-accredited. The window that's now open from crowdfunding, it really reduces and provides huge breakthroughs, barriers to entry for the technically driven, discoveries, innovations. It's causing creative and totally disruptive structures to what we see is a very inefficient and obsolete system called the market and the financial systems. So there's huge, top 25 crowdfunding platforms. They're listed on timesrealtynews.com. Cool place to check out what's going on in the crowdfunding of the world. The benefit to investors, it's just enormous. The traditional model is so restrictive. It's stocks, it's bonds, it's very, very tightly held. There's high fees, capital gains tax that are incurred. Investors, expect returns periodically, from the bond, hugely hinged on market prices and dividends of the stock, versus crowdfunding. The owner can offer returns per project. They can actually say and click, I want to buy that hotel, that apartment, very specific direct investments. And it's just way more attractive to someone who's getting more educated in investing. Why go through the market with all those fees when we can cut those fees through equity crowdfunding? Now, the diversification that crowdfunding allows is extraordinary. Investors have a preference, again, on project, per project. Like in ours, they get, which wells packages do they want? I know there's a lot of franchises that are starting to look at doing it this way. So the investment decision, won't be company driven, but project driven, which is very different. So under this structure, you can't, sell on the merits of the company anymore. You have to dig deeper and sell on the existing projects and the track record of the management, team and its success rate. Now, spreading out the risk. So compared to the investing, in one real estate company, which is kind of what, Wall Street does with the REITs and some of that, crowdfunding minimizes the risk to investors because it spreads the risk out by contributing to several projects. We call those blended returns. So instead of putting your eggs in one basket, you're really spreading them out to fill the gap. So, think of your, bank and your PayPal account. When you send a check to someone who uses the same bank, it's really happening is that the bank is deducting from one balance, adding to another person's. It's a ledger entry, right? We rely on the banks, and then we trusted these middlemen, to manage that ledger for years and years and years. And now we've learned that sometimes they aren't as trustworthy as the depositors can lose their money. I know through B of A, I'll say it loudly, they've lost tens of thousands of dollars of our investors into a Mexican account, and the money just didn't arrive on the other side. how much do you lawyer up to go against B of A to find your money after all that? You have to go through that. There are several places like Bitcoin. I mean, there's places where, like WealthForge, who we use. I mean, they manage the ledger. They're an independent broker. They work on a very, very, very low fee structure that the project owners pay, not the investor. So the protection and the privacy for people that are associated to these accounts is just extraordinary. When you look at the growth and the disruption that this is going to do, I mean, traditional financial and wirehouses are going to have a heck of a time, competing, staying in business. The one thing I will say to their credit that I'm still seeing is that the older investor doesn't want to just ACH or wire the money through these equity crowdfunding portals. They still like to send a check. They like to receive a check. So grooming the investor to say, you're not going to get a check, we're just going to do ACH or wire-to-wire transfers, has been a challenge, and a little bit, I shouldn't say it's not a barrier to entry, it's just a challenge to the education of the investor. I'm suspecting, this is a wild west out here, and I've been to a couple conferences, and I shouldn't say there's not a lot of rules, but the rules are being defined. It's going to look a little like the gambling industry for a while, right? The governments are going to be friendly, some won't, some states are more excited about it. The investment dollars and the jobs will go to the countries that are more friendly to the consumers who want to participate from anywhere in the world, from the privacy of their home without going through a financial institute into these equity crowdfunding choices. So it's an exciting time. I'm excited to be on the cutting edge of it with one project, a second real estate project to come, and possibly a third through Live Out Loud. So stay tuned for more. If you want to know more and have me bring some guests to a webinar from the podcast, go to asklaurel.com, put in your name, phone number, and email. Let me know where you're from and what you'd like to learn more about. And believe me, I let you help me craft this podcast, and the topics come from you. And it's just an exciting time. So stay tuned for more on equity crowdfunding as we move along. Have an amazing day.
Thank you for joining Laurel for this segment of Real Money Talks, how to make money, manage money, and invest money. To continue this new conversation and to find free resources to support your wealth creation, visit asklaurel.com/podcast gifts. That's ASKLORAL.com/podcast gifts. Thanks for listening, and join us again soon. New episodes are released every week.